Good morning, folks. It's 8:03 a.m. Chicago time on Wednesday, the 3rd of January, 2024. Thanks for joining me on episode number 2599. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're really looking at another risk-off day. The pre-market summary sheet is showing that we're tilted downwards. The Russell really breaking lower this morning. It was pretty much sideways yesterday for most of the session, but it's finally breaking lower, dragging us down, and the European markets have also taken a bit of a beating. So again, risk-off sentiment across the board. Asia also finished in the red. The overall themes really currently no actual news, no earnings reports, no big eco news. There were headlines yesterday, geopolitical headlines, the attack on a Hamas leader in Beirut, in Lebanon, by through a drone strike from Israel, and that had the market shook up a little bit. Also, the downgrade of Apple yesterday, I think by Barclays, Apple is down as much as 4.25%. Just a Goliath of a stock, dragging everybody down. We saw the weakness in NQ throughout the session relative to the ES. We saw it even before the market opened. Crude, which had rallied all night long, dropped $3.50 from high to low back into the 70s yesterday after trading up in the 73s, middle 73s. Pretty interesting move there in crude. You would expect crude to actually respond to the upside as the conflict increases in the Middle East. So those are the key pieces. The only thing that really investors and others are waiting for would be the numbers that are due this morning. This kicks off the December releases. The main releases this morning are the ISM Manufacturing PMI for December, and that's expected at 47.1. And then we get the JOLTS job openings, which tells us how the labor market is filling demand for employment or human resources, expecting 8.85 million, which is actually upticking from the prior. If you remember, during 2021, I believe 2020 and actually 2021, it was up at 11, 12 million job openings, and that's a lot of pressure on wages. So those are expected at 10 o'clock. Fed's barking, started speaking about a half hour ago, and then this afternoon we get the FOMC minutes at 2 o'clock, which are expected to be relatively dovish. No real change. The key thing to note here is that the odds, given the way yields have pushed higher, especially on the 10, the 30, and the spread between the 10 and the 2, and so on and so forth, there was 100% probability of a March cut. That has dropped to 80% now. So the market is backing off a little bit on the dovish story. So between that and the fact that there's just no news flow, we have a market that's a little bit jittery. This morning, the S&P multi-distribution profile, pretty active price discovery throughout the day. 188,000 contracts have traded, not as heavy as yesterday, not all that great actually. The inventory is 94% short. really tilted to the sell side. And then the range is pretty good at 27.25. The mode, as you could see down here below, is 25. That's the most common value. We're just above that. The edge of what we would consider normal is 35 points. Again, we're at 27.5. Okay. So that's where that stands. Note the movement in gold and silver. Gold falling below the 2050, and silver really getting below that 23 and a quarter or so. And also we're seeing Bitcoin and ETH coming off this morning. The dollar is strengthening. So that's the bigger picture. Let's take a look at the technical picture. Yesterday, here's what we looked at yesterday in full 4K HD quality. This is yesterday. Yesterday, we were trading during the trader bite between 83 and 85, 47, 83, 85. And I had talked about the fact that we're in between two distributions. 96.75 is an important over underline. If you recall, I said that if we push from 84 into 96.75, then we base and squeeze above 96.75, we're likely to reacquire 48.20. That's where I would be shooting. That would be the runner target, is 48.20 in that scenario. 96.75 being the low of Friday and the gap fills. So remember that number, 96.75. The other number that I threw at you yesterday, or range that I threw at you yesterday, is that 68.64 right here, 68.64. So the other scenario is we open at 84, test the gap fill, and then turn over to 68.64, right? 68.64 region, 68 being the MC, the microcomposite, or this combined profiles. Point of control, the most accepted area in the lower distribution. The most accepted area in the upper distribution is 48.15. The equivalent on the downside is around 68. And then we have there was a struggle between 65 and 64 on the rally day. And so that gives us this range here. Here's what actually happened yesterday. By the way, today we're back down to 1080p. So I hope you're okay with that. Downgraded the quality a little bit. But here's what we saw. So yesterday opened, tried to push higher. Let's squeeze this over. I requested more ticks, God forbid. And it's loading, and it's loading. But let's use the chart that's in front of us. We open up, we try a little bit higher, and then we immediately fall off, taking out the overnight low. So it didn't look to me like that test of 96.75 was going to materialize. That would have been the better short area. We want to see the market push and fail to fill the gap. Then we have a lot more confidence that what remains is a test of the downside. And what it did, though, is it broke down, went back to the open, broke the IB by just a few ticks. Then it went all the way across. And what did it do? It retested that 96.75, went to 97.50. So took it out by 3 ticks. Okay, so it went to 97.50, and then from there it came back into the middle. The expectation from here is that it is likely to just hold the middle. It has tested below the IB, it has tested the 96.75, and has come back into the middle. And to me, it looked to me like it was just kind of had nothing new to price in, and it was a little bit tired. And so I had no further expectations. So the 68.64 kind of didn't play out. But the market then drops. Um, Couple of catalysts there, Apple being one. Um, Market drops and it just pushes through and it gets right down here into the 65. So we're in the 65 down here. Yesterday, the low 65.50. So the market actually covered the range that we expected, which was 96.75 down to 68 to 64, right? So it got that done. It went to 97.50 and it went to 65 and a half. So right in the middle of the lower range, and then it bounced from there. So what we did is we moved to the lower point of control and we finished right where we opened. So we ended up with like a bit of a doji type candle for yesterday. So what it looked like is an excess on the low and the high, making it the idea coming into today, despite yesterday's afternoon rally, the idea coming into today is that the market has really exhaustively tested above and below. It created an excess above, it created an excess below. So most likely it will stay in the middle and finish in the middle. It did finish inside of the IB. The settlement is inside of the initial balance. So that's what we expected. It's what we got. We got it in a pretty aggressive way. And then this morning, it's been selling off in a pretty methodical kind of drop, pull back, drop, pull back. So it's constructing a pretty decent rotations downwards. Why this thing is taking forever to load, I have no idea. The NQ did the same. The NQ kind of did the same, followed the same sort of plan. So here's what we accomplished yesterday. We went. Oh, we went to that 96.75. We tested the point of control down here. And we finished right in the middle. And if you look at the profile, you'll see that it's actually pretty aggressive balance yesterday. This morning, we are trading below there. We broke through the 64 and we're trading just below. So we're starting to establish pretty good amount of resistance above us. And we're working our way to that next number I talked about, which was the 46 and a quarter. Let's call it 46. That becomes a really important area to defend. It's actually 50 to 46. If this area is not well defended, the run down to 47.10 is likely to be pretty fast. You can see why. Poor structure on this rally. This rally, it balanced quite a bit down below, and then it ran its way up and finished at the high. Very poor structure, basically news driven. Very poor structure, and then once we get into poor structure, we tend to move back to the base. In other words, the market has run away from that day's point of control and closed at an extreme. Once we get into the range, we generally fall right through that range because of the poor structure. So today, given that the 46 is only about 17 points below, this becomes a very interesting area to watch. So any attempt into the 46, I want to be short into that 46. I want to see if it breaks. If it does break, we're likely to see it follow through. If we're not on that and it breaks down, then we're looking to sell. Well, you have to be careful because it might do a liquidity check below the 46 and come right back up. But we want to see it weak on the rotations up, initiate the short, and then look for the run or the extension down. So if it does it on an impulse down, that would be favorable. And then it gets a weak pullback. And then now we have a pretty good chance of taking out whatever that impulse low is. Hopefully, you know, pushing us into the 46 and a quarter. So that's key here. The alternative view is that, you know, this thing opens not in a gap, but on the extreme. And what it does is it starts to grind its way back into yesterday's value. Yesterday's value is valid. So 75, 76 becomes the first test area, potential short there. But ideally, it opens, tests down, pushes up, and then it has a weak pullback that sets up the long back into the 76, 75, 76. And if it breaks the 76, now we're looking for the point of control. And it's a gap to settle trade, giving us a run of, say, somewhere between, you know, 68 and 88 or so. This would be a 20-point trade to the upside with about 4 points of risk or so. The alternative is it opens, gets back into the range, and really finds that resistance is still present. It pushes back to value low, point of control, fails, falls out of the prior value low, and then that sets us up for a short and for the break lower as well. I don't know which scenario is which, but those are the two key plays given where we are. Just remember, we are inside of this big double distribution profile that started on December 15th, or was it the 14th? 14th. We're inside of this. So I'm not too excited about the selling because it's selling within equilibrium, right? It's selling within a predefined range. It's not like it's breaking balance and it's running. You know, if it had been coiling like this for days and then now we have an aggressive sell-off, that's one thing. These tend to run quite a bit, but this thing has kind of been running up and grinding and has rolled over pretty methodically. So if you watch the point of control here, shift, 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 very methodical point of control. Yesterday I was actually missing this day, so I thought there was a gap. I wasn't here for it. But you could see this rolled over pretty nicely. So this isn't a market that is moving from balance to imbalance. This market is moving from a rally to a perfectly balanced day, which marks the high, to pretty methodical selling, right? We've checked the prior day's range right here, and we've tested down, and we finished in balance. I expect more of this kind of action to continue. So I expect that any attempt higher is likely to see some resistance, continued lower highs, one-time framing down on the daily. That's the expectation. Things change for the sellers if we break yesterday's high that ends the one-time framing lower. So if we get to 4,800 and start pushing, we're likely to see that 48.15 area pretty quick. That's going to be a very obvious. So right now, the auction structure is very clear to me. What it has done. This not so clear. Well, what are we doing here? But this where we open in balance. We open, we bounce out, and then we kind of shift the point of control very methodically and kind of roll. We roll into selling. This is just a pullback. So far, this is behaving like a market that's just pulling back. We haven't really sold off all that much. The high is 48.40 or so. And we're currently trading at 47.60. Let's call it. This is 80 points. It really isn't all that much of a pullback given that we're in the 4,800 zone. So that's what that looks like. NQ relatively weaker. So you could see the NQ is like just it's a different ball game in here. NQ just opened and just exploded to the downside, and then yesterday it opened at its high, and it broke down pretty good. The NQ's largest components were very bearish yesterday, and they continue to be bearish this morning. So if we look at the heat map, you can see that the largest components are already negative, and those are the largest components in the NQ. The NQ is less diversified than the S&P when it comes to the markets that are getting hit, which are mainly techs right now, tech and tech related. So that's that. Crude, very interesting yesterday. Remember what we were talking while the trader bite was happening? I said, hey, we're opening at the high. We pushed 4 ticks higher, and it's an open drive down. This is not a day you want to buy crude. If you watch yesterday's video, this is what I talked about. We're moving from balance on an open drive. This is a sell and hold kind of trade. So if you look at crude, yesterday, it was pretty much drop, pull back, drop some more, pull back to the prior low, drop some more, pull back to the prior low, drop, and then it started to extend. So it started to create separation. So you can see with every drop, it's not really pulling back to the prior low. So it started to accelerate down. So once it got away from the VWAP here, it was tougher to find a clearly defined structural risk point, stop point to get short in crude. And then it started to consolidate down here as it pushed into 71.50. And then finally we get the VWAP test, and then boom, it broke down. So it did most of the work within the first hour, and then it finally broke down. Later on in crude, the next setup in crude, what does it do? It goes right back to the IB right here. So it retests the IB for a continuation trade. This test looks for it to fall through this consolidation area or pullback area and targets the low, and it managed to pull that off. Again, in my opinion, crude is still auctions pretty well. Just remember, don't trade CLG4. If you're going to try your hand, try it in MCLG4 because there is a substantial risk of loss trading the physical contract or the big contract. One of the things you want to observe about crude is since it opened with 0 delta right here, and it ran up. Look at how it tapped that VWAP, okay? It ran up, and it ran up on relatively modest aggressor buying. So the cumulative delta in crude was positive. Then we open and we have an open drive. We open, see the I behind the open are basically on top of each other, and we sell all the way back to the full session open, yet it touches the full session 0 line for cumulative delta, and look at what happens afterwards. As soon as it starts to push higher, lots and lots and lots of buying. It pushes down, way down, new low, so new low right here, and it's just a pullback in cumulative delta. Then it pushes higher, and you get a higher cumulative delta. It pushes even lower, you get a little bit lower, but then as soon as it peaks its head up, it's pushing higher. So this looks to me like there was an aggression on the buy side. Somebody's either hedging a position or whatever it is, they're protecting against selling, and there's a bullish tilt to crude. So despite the fact that it made a lower low, crude is very likely to regain this open. So to me, it's crude at 73, unless there's news. Crude at 73, not a surprise at all. As the price action was not supported by aggressors at all in this sense. Anyway, I've rambled too long. Good luck today, and I'll catch you tomorrow. Don't forget to hit the like button in front of you and also to subscribe to the channel to help promote it. Take care.